Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 1 hour time frame with this bullish scenario where we're looking for a 5-wave impulsive structure to the upside, where preferably price is going to take this high one more time to finish a wave 5, therefore a wave A. Look for a 3-wave corrective structure to the downside in a wave B, where then the invalidation is going to move below this low here, after which we want to see a wave C to the upside, which is an impulsive 5-wave structure. The reason I say that preferably for this wave 5 and finishing wave A we want to see this high taken is because of the volume in this final leg that we have towards the upside. If I zoom in here, then you can see that in this move towards the upside, the highest amount of volume is in the final candle, and that is not actually what you like to see in an impulsive structure. If this over here was the end of your wave 5, then even in a wave 5 we want to count a subdegree 5-wave structure, where by far most commonly wave 3 has the highest amount of volume. Then we want to see a wave 4 on lower volume, and then another push to the upside in a wave 5, creating a higher high on lower volume. But as you can see over here, right, price moved to the upside, highest amount of volume is in the high candle over here. We never got a wave 4 and another move towards the upside in a wave 5 to create a higher high on lower volume. This then increases the probabilities that this high over here is a corrective high and not an impulsive high, which is the reason that I put wave 3 over here and wave 5 not yet in this particular scenario. Now that increases the probabilities for this high to be either a wave B high or a wave C. If this high is a wave B high, then we have to think about a potential flat in 4 in a wave A, B, and then a wave C in this wave 4, where wave C arguably could already be finished, and then we want to see a continuation to the upside, where for this wave 4, the invalidation is this high over here, as well as the 0.618 at pretty much the same level at 40.5k. Another potential structure for this wave 4 is a triangle, where we have over here your wave A, then you have your B, C, D, and eventually your wave E, where afterwards you want to see price moving towards the upside. And that is because of the 3-wavy nature of the structures that we have, but more about that in the local folder that is coming up. If this is a wave C, then of course we like to see price moving towards the downside, which I'll cover in more detail in the bearish scenario. Interesting resistance areas for this wave 5, and therefore the potential high of wave A, is the blue box that we have above price here, sitting between 43k and 43.2k. We also have this support resistance area of the previous range here. You can see acted as support, resistance, resistance, resistance. So this is also an area to keep in mind between 43.2k and 43.4k, and then we already start to go to higher levels as well with the weekly here at 43.9k. Preferably, price is then going to reject in this scenario, of course, and move towards the downside for wave B, where we have very interesting support between 39.9k and 40.1k, where we also have the weekly naked point of control of last week. So that is actually quite interesting, after which we then want to see a wave C to the upside. Now, targets for this wave C is, first of all, then that potential weekly, if we don't reach it with this move to the upside here at 43,950, but then we have interesting resistance all the way up here, sitting between 45.9k and 46.7k. In the bearish scenario, we are looking for a 3-wave structure to the upside in a 5-wave A, 3-wave B, and then a 5-wave C to the upside, which preferably is already finished in this particular scenario, where the common target area for your wave C is between the 1 and the 1.618, where the 1.618, as you can see at the moment, is nicely respected, and we can count a 5-wave move here in wave C. Now, after this wave C, we then want to see price moving towards the downside, preferably that starts with an impulsive structure, 1, 2, 3, 4, and a 5-wave move, correction and continuation. However, if we go to the local time frame, zooming into the 15-minute, then the probabilities here of this move to the downside are a little bit higher for a three-wave structure. Now, of course, wave C can still be up here, and this three-wave structure can be a wave W, for then a wave X and a wave Y in a double zigzag. So it doesn't necessarily mean we can't go down, but it is something that we have to keep in mind with the probabilities, as the probabilities then are higher to sooner or later take this high. Now, what you see in this move and this count to the downside here is then a wave A, a wave B, and then a wave 1, 2, 1, 2, 3, 4, 5, 4, 5 in wave C. Now, in this move to the downside, if we would try to count this as an impulse, then we have to count this as a wave 1, 2, well, likely a 3, 4, and a wave 5. But what then happens is that the subdegree structure is not really matching up nicely. If this is a 1, 2, and this is a 3, 4, 5, then this 2 over here has to match with this wave 4. But then we have this structure here that doesn't get a count, right? So it's actually quite difficult to count this as a nice impulsive structure to the downside. Besides, we never had a range, the length in time of a potential 2 in a 1, 2, and then a wave 3, 4, 5. We are looking for a wave 4 that is usually longer than wave 2, most commonly, but that is not something that we see in this range to the downside here, or this move to the downside. All the ranges that we had are shorter in time compared to this one here. So that also adds to the probabilities of a three-wave structure here towards the downside, which then adds the probabilities to a potential 4 and then continuation to the upside in a wave 5 as explained just now, or in the bearish scenario, where this is a C, a potential double zigzag to the downside, but then you really want to go to lower prices, and a double zigzag generally is less common. So that is also something we keep in mind. When we look at the CVD divergences, we do have some bearish CVD divergences here on the chart. We have a lower high on price and also over here, but a higher high on the CVD. So there is some absorption going on of market longs. These are not ideal CVD divergences, as preferably you see bearish CVD divergences with the actual high over here and then a lower high on price, and the same would be true here, lower high on price and then a higher high on the CVD, having a bearish CVD with the actual high. But nonetheless, these are important to at least know about. That's why I cover it in this particular video. And for the smaller CVD here, it plays out if price takes this low. The CVD is invalidated if it takes this high. Of course, pay attention if we don't have another bearish CVD coming here. And for the bigger CVD divergence, it has played out if it takes this low here, and it is invalidated if price moves to the upside and takes this high. Now we do have some news this week as well. Over here you can see the red flags for Wednesday, January 31st at 8 p.m. Central European Time and 8:30 p.m. Central European Time, and also on Friday the 2nd of February at 2:30 p.m. Central European Time. So make sure you trade safe around these hours, because price might be extra volatile at that moment. So if we then look at the probabilities of the different scenarios, then on the high time frame, which is the 12-hour plus time frame, which is not covered in this video, we are still looking for prices to go below this low over here. And also when we look at the low time frame structures, which is this one over here, then an A, B, C, or 1, 2, 3, we're also still looking for lower, but initially we are first still looking for prices to move towards the upside in a bigger three-wave corrective structure before then eventually continuing to the downside. Now, when we look at the micro scenarios, which I covered in this particular video, then on the micro, the probabilities start to increase for the bullish scenario, which is then the impulsive scenario. The longer price is ranging here and the naked point of control holding. Yesterday, we were talking about the probabilities switching for a move to the downside if price can hit 42.1k, where the 618 was, right, during the live stream, where then the daily naked point of control is very important support, and it remains very important support as well, as below this daily naked point of control there's not too much going on over here. You only have this low for potential swing failure, but that is about it. So the longer price can range here, the higher the probabilities for price to take this high. A new high above this one here would also increase the probabilities once more for a potential 5-wave structure here, 1, 2, 3, 4, 5 to the upside, and then a wave A. If so, starting to look for a wave 5 and an A, and then a retracement to come, right? That after a new high, we are eventually looking for a bit of a retracement in a B before then continuation to the upside in a wave C. More locally here, when we zoomed in to this move to the downside, the probabilities are higher for that move to the downside to be a 3-wave structure at the moment in an ABC, and this increases the probabilities to take this high sooner or later. It does give a bit of higher probabilities also to the bullish scenario in a 1, 2, 3, 4 and a wave 5, because if this is an ABC to the downside, then in the bearish scenario this has to be a W, X and then a Y to really go down to much lower prices, but a double zigzag is less common. So the general probabilities on the different time frames is on the higher time frame we are eventually still expecting lower prices to come. On the low time frame, which is the 4-hour time frame, we are still expecting price to move to higher levels before then a rejection and a continuation to the downside in line with the high time frame probabilities. And on the micro, we are looking for a retracement to come relatively soon, right? We are starting to end this structure here, either an ABC, right? Or we're looking for that bullish 1, 2, 3, 4, 5 wave structure where we have some interesting resistance above, which can be very interesting for then the start of a retracement to the downside, looking for that wave B and then a wave C to the upside. So generally on the 12-hour daily time frame, the high time frame, we look for downside. On the 4-hour, we are still looking for more upside. And then on the micro, we are looking for a retracement to the downside soon. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing. And I'd like to see you at the next one. Bye bye.